Stocks selling off in heavy trading Monday afternoon, this first trading day of the new year, as investors fret about the outcome of the runoff elections in Georgia. For more on that and the outlook for 2021, let's go to Dallas, Texas, where we're joined by Tim Bray. He's Senior Portfolio Manager at GuideStone Capital Management. Good afternoon and welcome, Tim.
Thank you, Fred. Good to be on the call here, and Happy New Year.
Happy New Year to you, too. Well, so let's take a look at this new year, 2021. What's your outlook for the U.S. equity market?
Well, the year is starting just like we expected. We expected some choppiness at the start of the year as we look down the Georgia Senate runoffs, and as we've seen a bit of some slowing in the economy, some concern over the lockdowns related to the coronavirus. But we do think on the backside of this, perhaps later half of the year, we expect a strong year for growth, for GDP. We expect above-trend growth. We expect strong double-digit earnings growth. So we think the market's heading higher this year.
And what will push it higher?
Well, we think it's basically a bunch of pent-up demand. So we think that the economies are going to normalize this year. We think there's going to be a successful rollout of the coronavirus vaccines. Probably in the second quarter. And as that happens, you're going to see basically people back traveling, back wanting to do entertainment, wanting to get together, wanting to spend money that they've been unable to do, just ready to get out and to eat out. And we think there's a lot of pent-up demand that the consumer is going to be strong, and that's going to drive markets higher.
But Tim, what if in the Senate runoff elections in Georgia tomorrow on Tuesday, the Democrats were to sweep, contrary to the market view that a split Congress is good for investors? What do you think is going to happen, and how will that impact the markets?
Well, first of all, we know the markets hate uncertainty, so that's part of the volatility we're seeing today. Both the high levels of hospitalizations, new records that we saw over the weekend, as well as the Georgia Senate runoff. We do think that the outcome of this election is very significant. Obviously, a lot of Biden's agenda hinges on him controlling the Senate. And there's positives and negatives. The market likes the divided Congress, but the market will also like additional fiscal stimulus, which is bound to happen before some of the negatives, like additional taxes, would result from a Democratic sweep. So, we'll see earlier in the year when we thought it was going to be a Democratic sweep, the markets like that too.
All right. So if it were a Democratic sweep, that would not change your outlook for 2021.
It would not, actually. We think that you're going to get significant fiscal spending, probably an infrastructure plan. The markets are really any excuse to go higher. I think the markets will continue to find opportunity to shift higher. We think more so than the outlook for Congress is really what the Federal Reserve is doing. And we know that there's easy monetary conditions, and they're going to continue to support this economy. And that's going to be a big factor as well.
And how should investors reposition their portfolios? What stocks should they be in, or sectors?
Yeah, we do think we're going to see different leaders this year than we did last year. We think that this is an opportunity to maybe fade away from some of the big tech names that drove most of the gains last year to look to more of the cyclical-oriented stocks, some of the value plays that have really underperformed. Obviously, today is not a good day for the COVID epicenter stocks, but we think some of that is profit-taking. Some of that's just some concern over near-term frothiness in the markets and the Georgia runoff. But we do think there's a lot of opportunity there. We do like some portions of healthcare and of cyclical stocks, industrials, as well as emerging markets and small cap.
All right. Thank you, Tim, for your thoughts on that. Our thanks to Tim Bray of GuideStone Capital Management in Dallas. I'm Fred Katayama in New York. This is Reuters.